You're the worst tree climbing fish in the history of tree climbing fish. You're terrible. And it's like, what do you want from me? I'm a fish.
Choosing between term and whole life insurance this week on the Extreme Personal Finance Show. All right, welcome to episode 31 of the Extreme Personal Finance Show. My name is Chris. Joining me, my friend, next to the hearth you have there
Indeed.
is Dan. How you doing,
Hello.
Dan?
How's it going? Switched up a little bit this week because it's chilly.
It is
So
chilly.
I'm in front of the fireplace.
Looks nice and cozy. I know we are the weather took a really really quick turn.
Right. Surprise.
I know. It was like 55 and I hung all my holiday lights.
Okay.
By the way, I got my those smart lights.
Hmm.
Uh, they're freaking awesome.
Yeah. We were just looking at some in Costco a couple days ago and almost went ahead and got them. And I'm kind of feeling like we should have just gone ahead and got them.
Well,
But
so it's funny. So I told you that there was so two neighbors on my
mhm.
block. So then I installed them. So I was the third. And sure enough, another neighbor just installed the same ones. So now we have four neighbors with the same lights. It's pretty funny.
Yeah, got to make a competition.
That's right. Um, anyway, so it took a turn. It was like 55. I hung the lights, and then within like a day, it's now like 30.
Right. Not just colder, but oh, here's some rain
Oh,
and here's some
dude.
wind. It's like
Oh
stop
man,
it.
the wind and
Break
the
us in
rain, yeah,
slowly.
just brutal. I know. It's so freaking cold. So this is gonna be a really riveting conversation. I know no one likes to talk about like how exciting, how extreme can we make this conversation about insurance? But there was a couple things that I wanted to talk about and why I wanted to kind of have this discussion. And one, I was talking with someone recently, and they had mentioned that they were going to be paying this premium on this insurance policy, and I just casually asked, well, what exactly is this? And they really didn't know. They're just like, oh, well, it's something that my dad says that I should do, and I just pay it. And I said, well, is that like a whole life policy? And later on, she said, yeah, it's a whole life policy that her dad just said that she should be paying, kind of, and that's fine. But I also want us to kind of talk through kind of what insurance is for, and
Sure.
just
Yeah.
being just being a little more knowledgeable. So there's kind of like two main there's a lot of different types, but the two main types we're talking about today in this episode is term life insurance versus whole life insurance, and knowing kind of the differences between them based on your needs. And the one thing that just kind of drives me crazy, because there was another guy that I knew, again, a really good friend of mine. I worked with him for years, and I know that he often would talk about how he has this life insurance policy, and he really did believe he was using this life insurance policy, the investment component of that policy, to build wealth. And I just think that people think that because it has this investment component, that they're always building this tremendous amount of wealth with this, um, using this mechanism. And I most of the time I just kind of smile and nod when they kind of talk through it, because a lot of the times those type of products, they have a pretty low guaranteed rate of return, but there's also fees, there's also commissions, there's things that are in place that may negate some of the gains they feel as though they're getting, when you could actually have that invested in other vehicles that are doing well, doing much better than the investment component of a whole life policy. So I know that I just spit out a whole bunch of stuff to begin with, but that's why I think I want to talk about it. So I want your opinion, what insurance is meant for. And then
Right.
I think you hit something before we started recording. It's really looking at, what do you need?
Right. Yeah. So, oh, okay. One thing to start off with is acknowledging that it can be terribly confusing because so whole life insurance is a type of permanent life insurance. So there are other types of permanent life insurance, like indexed universal life, variable universal life, uh, single premium whole life insurance. It's not quite as simple as even just being like it's whole life insurance or it's permanent life insurance. It's like, okay, there's different kinds. And so not only does someone need to know, it's like, oh yeah, it's permanent life insurance. But on top of that, they would have to know which type of permanent life insurance and why that one, which more often than not, people don't know. It's because whether it's like, oh, my parent told me to get this, or my friend did this, or I don't know, I just knew I needed a financial plan. So I went to this person and they said my financial
Mhm.
plan needed to be this insurance product. Right. So I think for any of the topics we've talked about, this one's no exception. On the one hand, not everybody can know everything about everything, right? So it's good to go and find people who are professionals in a certain area and get some advice. I don't think I've used this saying in any of the episodes, but it's one of my favorites. Which now, of course, I won't be able to remember it. Uh, so you can't abdicate, you know, your financial future, right? You still have to have some knowledge of what's going on. Delegation is not the same as abdication. You can delegate some of the responsibility for the minutia on something, but you can't just abdicate all of the decisions to someone else and be like, I don't know, do whatever you think, and I'll just buy it. So you've got to be willing to know what it is that you're being sold and understand it. And if someone's not willing to talk you through it and help you to understand it, one, maybe don't work with them. Or two, there are so many options these days
Mhm.
that can make sense. So if there's one that's super complicated and you just don't get it, don't do that one.
Mhm.
Do something different. Find one that you do understand, because the things that you do understand are the things that you'll stick with,
So,
right?
so let me ask you this, Dan. So, knowing that life insurance is there, so again, simplest forms, you pay regular premiums, and in return, the insurer, right, promises to pay a death benefit to your beneficiaries if you pass away. So, typically, we would look at having insurance in place that would basically take care of my family. Like if I had a spouse and kids, if my income were to go away,
Mhm.
you would have something that would replace my income, right? So maybe that's satisfying some debt. Maybe that would,
Sure.
you could pay off your house, you could pay off, credit cards, you could still afford to live that same quality of life if my income was now gone.
Sure. Um, I'm going to take it one step further than that
Okay.
and say it's not just about your income, but your impact
Hmm.
on the family situation. So if your income is gone, but you're able to do half of the chores and watch the kids
Sure.
and do whatever things they are that you do, that's just what you do as a human. It's not what you
Yep.
do
Yep.
because you're a dollar amount, right? So those things have to be considered as
Sure.
well, especially people who might have like younger kids who need to be, someone needs to be home when they get home from school if
Yep.
you work late hours, or maybe you're working a lot of hours or it's the wrong shift, or who knows, whatever reason, it's
Right.
just someone to help with
No,
uh, all those
I,
things that you do when you have a family unit.
I like that, and I think I'm going to start using that from now on. Can I use that from now on?
Absolutely.
In addition to replacing your income, it's also replacing your impact.
Yep.
I
Go
think
for it.
dude, I should put that on a t-shirt. That was brilliant. Pretty good. Um,
Yes.
so I think so. Let me ask you this because this is something that really has always kind of confused me,
Okay.
and it's something that we actually experienced in my family. So why would one then take out life insurance policies on children? So I never quite
Okay.
understood. So both of my kids, I had an uncle on the other side of the family. Again, great guy. I loved him. He was a great guy. Passed away, actually had a brain tumor. God, it went really, really fast. Anyway, brilliant guy. He was my uncle-in-law. Is that a thing? Oh, he is.
Sure.
But when my children were born, he got them a life insurance policy. Now,
Okay.
at the time, I had no idea what this thing was. He was paying the premiums, right?
Yeah.
Then when he passed, we realized, well, he had these life insurance policies on my kids. Well, then I kind of understood what insurance was for, what it could be done. Both my kids, once they turned 18, we got the cash value component out of it, and they just invested it in an investment account, and they're
Sure.
making a lot more better returns than what they were doing in the actual policy. But I just want your thoughts. Like, what am I missing? Like, is there something else that I'm missing there?
Well, so, and 100% honesty, there are some of these plans that I don't know enough about the inner workings of. I know conceptually that some are supposed to be like you mentioned, a cash value, and then that cash value over time will help pay for college
Hmm.
or some kind of career schooling, right? Um, but then you could just make the arguments of, is insurance the right product to do that? There's brokerage accounts, there's UGMAs, there's 529s.
Right.
Is insurance the right way to do it? So, um, not being super well versed in that product, I'm going to say my gut says probably not, but maybe.
Sure.
That being said, though, having insurance on children could be something where an individual has thought about it and they said, okay, while I'm working, how much time will I need to not work if my child passes?
Mm.
Like, I just don't want to go back into the office. I don't want to go back to work. Everybody's going to grieve differently, not just how they do it, but how long it takes. So that could be one thing that they think about is just like, all right, well, if my child passes, I don't want to have to worry about getting up on Monday morning to go to work.
Right.
I have other things that are more important, or worse yet, having to take unpaid time off,
Oh,
right?
totally.
Where it's just like, all right, I'm not at work and I'm not making an income, which means bills are going to pile. It's, oh, you know,
And
so it's a consideration.
yeah, and there's fee and there's other costs that'll, you're going to have funeral expenses and all the
Some,
other. I
yeah,
mean, we don't want to talk about it, especially with our children, but that would make sense, right? Now you have something to cover those costs, right?
right. Yeah.
So,
So you just don't even have to worry about it.
yep.
It's not, where's the money going to come from? It's like, well, sucks, but this is where it's going to come from.
Yeah,
So,
so let's go back a little bit, like when you talked about how whole life insurance offers kind of this lifetime of coverage versus term where you basically have this specific, well, you said permanent, right?
permanent life insurance policies,
Okay,
which is my understanding is the if you want to do an all encompassing, like all of the types, then that's the verbiage to use.
got it. And then term life insurance, you'd pick a term that best aligns with your goals, like typically like 20 years, for example.
20 years, or some people will even stack like 10-year policies. They'll do it 10 years and 5 years into it, they'll move it
Hmm.
out just because life changes, and you don't really know what it's going to end up looking like. So there's different methods of doing it, but for sure. Yeah. We'll go 20 years, 20-year term. Yeah.
Right on. And I know you and I had this discussion. It was a while ago, but I think you and I were out for pizza and we were talking about again that whole the concept of there's this investment component that is a cash value of these whole life policies. And I know you kind of talked how those policies might be best for those high net worth individual, like
Right.
really high net worth individuals. And that was something that kind of clicked in my head. I'm like, oh, yeah, that's where those policies kind of make sense. Do you want to just kind of explain that a little
Yeah.
bit?
Well, I mean, there's several different places they can make sense. So one, high net worth, you just have so much wealth that you're just like, all right, well, I've maxed out a 401k or I've maxed out whatever self-employed retirement plans that they may have. They have enough money in a brokerage account and in a savings. They're like, what do I do with my, oh no, the horrors. What do I do with my leftover
That's right.
money? Um, a lot of times then that's a product that can be beneficial for them, whether it's one common place to see it is with uh, leaving legacy money.
Oh, sure.
So as people will get older, then they can buy this policy that's going to go from 60 to 100. It's a 40-year policy that is going to cost a lot of money, right? A lot of money. However, so I'll give you the exact dollars amount are not accurate because it's been too long, but I'll give you an example of where I've seen it work. Individual had come into a large sum of cash from selling real estate or doing something and wanted to be able to leave money to children, right? So yes, they could just invest it, either aggressively or not too aggressively or however they wanted to do it. But over time they'd owe taxes on that money, right? Just because, that kind of money, the dividends are going to be pretty high. So then you have to pay taxes on the dividends, right? Various ways that the tax man's still going to get you. Anyway, annual premium was close to $90,000.
What?
So yeah, exactly.
What?
75, 90, somewhere in that range. But after 10 years, it was fully paid up and to the tune of something like $20 million policy. Okay. And then, so if you looked at it, and if you did, don't even worry about taxes right now. If you just look, okay, I'm going to invest this and it's going to grow until I'm 100 and then the kids are going to get it. There are ways of doing step up in basis. I don't want to get too complicated, but generally speaking, that money to their kids, at some point, their kids are going to get taxed on it. When they sell it to take the money out, somehow they're going to get taxed on it eventually, right? And what it would grow to was roughly $20 million, the face value of the policy. So instead, he bought this policy that if he died anywhere before 100, the value of it would actually be higher than if it were invested. And when he did eventually pass, it would go tax-free 100% to the children. So that's an example of, yes, it made sense because this guy had so much money that was just sitting there. It's like, what do I do with this wealth? It didn't grow his wealth. He was wealthy and then used his wealth in a manner. Yeah, you could argue that it did continue to grow, but not because it was invested in a certain way. It continued to grow because it was a tool to allow this legacy money to go on.
So a way to transfer your wealth to your family, but then also better tax planning on their end, right?
Yeah, exactly. Yeah. So it's just another tool in that whole tool belt. But the whole point being is that he had a large sum of money, and life insurance was not how he got this large sum of money. Sure. He had business opportunities and real estate and various regular investment vehicles. So I don't necessarily want to cut to the chase with this, but this is kind of how I think about it. And it almost makes it a little bit easier. So you won't hear an influencer talk about how Congress just passed this little known way of making sure that you can become wealthy, about term life insurance, about 401ks, about buying index funds, about buying real estate. You don't hear about any of those things. You hear about various forms of permanent life insurance. Why is that? Why is it? And a lot of times those people who are doing it aren't even the people selling it. They're just like, go to this link, and it takes you to this entirely other company. So if any product, right now we're talking about life insurance, right? But any product has to push you so hard to say that Congress did this little known thing for you to buy it. That by itself is like, no, Congress didn't do that for anybody, or the secrets that the rich don't want you to know, which I don't know. I don't want to go too far out in that field, but I have a theory on that too. It's just like,
isn't that funny? Like there's so many like the influencers that are like, the rich don't want you to know. It's like,
so here's the thing. Okay. So the society we live in, right?
Yeah.
Like it or not, capitalism, right? That's what it is. That's what we in the US are born into. How did the rich people get rich? Well, they either own a company or they work for a company and they sell products to people.
Mhm.
So now this is way simplified. So please understand that
Yeah,
in
yeah,
advance. Um, how will they get more rich? If you have enough money to buy more of their product.
that's right.
The rich people are okay if you also become comfortably wealthy, because then you'll
Mhm.
go and buy the things that they're trying to sell so that they can be more wealthy. So just the idea that there's this secret little thing that they want to keep people out of, it's like, no, they want you to have money that you can buy
That's right.
stuff, right? So
So paying money to buy something. This is one thing that, and again, especially in like the FI community, I mean, but really it's everyone always talks about, to not have your, not spend all this money in fees, all these monies in commissions when you're, investing and trading and all this stuff, right? Oh, I don't want to spend all this money. But the interesting thing that I do feel, and I think it's just because the people that I've talked to, I don't know if I should name them. Well, I'll just name them. So, I mean, I'm not, yeah, whatever. Just being totally transparent, was Thrivent. So
right.
when my kids were small, I met with a Thrivent guy, and it was so, I don't know, just like high pressure to buy this particular insurance product
Mm-hmm.
that it made me feel super uncomfortable. And I didn't quite understand it. I didn't really know about the differences between term life and whole life and all these things. But he was really trying to sell me on the idea that, well, I'm going to use this as an investment vehicle. I'm
Right.
going to use this basically cash value as an investment vehicle. And that leads me to think that there are these commission driven salespeople that may be using deceptive practices a little bit. I don't know. Because
Sure.
they lead with the investment thing. And I'm like, well, it's really not. It's an insurance thing.
Right.
Right. I mean, I don't know. That's the way I think about it. And I do think it can be really confusing because they can be working as a fiduciary, thinking that they're going to be working, in your best interest, and they may present themselves as such, right? Implying that they're obligated to only work in your best interest until they're not. Because
Right. They don't have
then
to tell you when that changes.
they don't have to tell you, right?
Right.
It's not like they just take off their one hat and put the other hat on,
Right. Yeah.
And so that's what really gets me. And so, and this is something that I had to do some research when I was looking into it because I didn't understand, well, what that what that really means. And it means like they actually switch to what's called the suitability standard, which means they are just recommending insurance products that are suitable
Right.
for the
It's not a
situation.
bad product for you. It just may
Yeah,
not be the ideal product for you.
exactly. And so, but that product then could be something that they're earning a bigger commission on or something,
Yes.
right? And so
Yes.
that's where
So that's a large reason why there's been more of an uptick on fee only financial planners.
Mhm.
You know, whether it's a flat fee of X number of dollars or like a based off of assets under management, still a fee only, right?
Mhm.
So not taking commissions. That's a good reason why there's been an increase in that kind of business model. I do want to take a step back, and I know that you weren't doing this, but just for anybody who's listening who might
Mhm.
have a Thrivent agent or
Yeah.
whatnot, um, when it really comes down to it, it's my opinion is that it's not an issue with Thrivent. It's not an issue with the product. It's an issue with the way that Thrivent has decided to compensate their
Mm,
associates,
sure.
and then the associates being people just like us who have rent to pay and food to buy and are they just end up looking at what's the thing that's going to make my paycheck the size it needs to be in order to take care of my family, right? So on the one
That was a
hand,
very diplomatic and fair way to say that, Dan.
you
Yes.
know, hey, I'm sure there's crooks out there. There are
Yep.
crooks out there, but there are also some people out there that are just like I have
Yeah.
bills to pay just like you do,
Sure.
and may not even realize that they're being a little less than above board, right?
Hmm.
They just get in that mindset of like, I have to pay my bills. I need to do the thing. And that's just where they get stuck, right? So So just to put that out there, it's like if you're with Thrivent, it's not necessarily that you're being taken advantage of,
Sure.
but maybe be willing to look into what products that you have and why do you have them,
No,
whether it's that company or any other company, right?
that makes sense.
So
Yeah.
kind of talking about the fees and the commissions and whatnot. There's one company that I know of that does, and I don't even think this is true. It could be true. Doesn't They sell insurance, but they don't get commissions off of it, which I don't think is accurate, but they are big proponents of the fee only movement. So there's got to be something there.
Mm-hmm.
But generally speaking, the insurance industry is just one that works on commissions. It's a commission product environment. And that's just what it is. And there's not necessarily anything wrong with that if the product that you're being quote unquote sold is the right product for your need. So it's like if you need term life insurance, right? But you're given this permanent life insurance and it's the fish. And you'd be like, I need you to climb this tree, climb the tree, fish. And the fish is like swimming around, doing its best, maybe jumping out of the bowl a couple times. Be like, I'm trying. So you're the worst tree climbing fish in the history of tree climbing fish. You're terrible. And it's like, what do you want from me? I'm a fish. I do this thing. I don't do that thing. So buying an insurance, if it's the right product, is the right product. And if it means there's a commission, then there's a commission. It means there's a fee, then there's a fee. If it's the product that suits the need that you have.
Mm-hmm.
But what happens too often is there's a large income check that comes off of selling that product, and that gets more of the focus rather than the right product for the individual.
I would say I'm not going to bash commissions because I mean, I earned commissions for the last 7 years. So, I mean, I get it.
Right. Yeah.
I mean,
that's, I think though, I just think it needed to be said,
mm-hmm.
because a lot of people will commission. They're the worst people in the world. It's like, well, take a little bit of ownership and know what you're buying.
Right.
And if that's not the right thing for you, then don't buy it. It's okay.
Yep.
Buy the other thing.
Yeah, no, I do. No, I do appreciate that. And I think, one thing that we also talked about, I know you and we talked, I think this was early on, like when I know you and I first met, we started talking about insurance. I can't remember how, because we have riveting conversations about insurance.
Oh yeah.
But I remember I said, yeah, I never had an individual policy because my employer offered as one of the benefits, they offered a life insurance benefit. And so while I was employed, they had something where, again, I would get like a multiple of my annual salary as my benefit. Then I could do a buy up. So I could buy up and get like 3 or 4 times my annual salary. And then part of that as well is, depends on the employer, but my employer also did something where if anything did happen and I did pass away, then all of my RSUs or restricted stock units would automatically be 100% vested for my beneficiaries as well. So I felt as though, my benefit plus my RSUs, like that's plenty for my family to have.
Yep.
But I know
which works great until tomorrow when you're not employed there anymore for whatever reason, right?
Exactly. So that was one thing I wanted to have you chime in on.
Yeah.
Because I mean, hindsight's 2020, but I didn't have it while I was employed because I had the benefit, but you did have a valid argument to that. And what was it?
Well, it's like I just mentioned that most of the time, when you leave your employer, you leave the benefits that you have with that employer. With health insurance, you can get COBRA for a time period. Some employers do have it where you can continue to get. I was just speaking with someone not too long ago who's a new teacher. They have a group policy through the school district that if they leave the school district, they can still have the policy. But they talk about it like, oh, we're just going to keep taking care of you. It's just like, no, you have to now start paying the premium. And if for whatever reason that you're not aware of this or don't do the paperwork right or whatever, and then that policy lapses, then now you don't have that insurance, right? So the problem is when you leave your employer, that benefit stops. Or which is related to people getting insurance younger, which I also advocate to a reasonable extent, which we'll get to in a moment. So if you have a policy in place already, let's say you leave your employer because you got a health risk and you're just not able to work, and the employer is just like, we love having you here, but you're not going to be in the office for the next 9 months, and we can't afford a sabbatical or whatever. So not only do you lose the insurance from your employer, but now you can't get insured on your own because you have some kind of cancer or some other kind of health risk where insurers aren't going to insure you.
Sure.
So that's why I do recommend, you know, you can't say how much, you can't say how long. That's all going to be very specific to the individual situation. But term insurance, generally speaking, is very, very, very inexpensive. That just have another policy outside of your workplace. Or if your workplace is charging you, see how much they're charging you. You might be able to get it cheaper outside of the workplace. Mm-hmm. And then you don't have to, one, you're saving money because the premium's lower. And then two, it doesn't matter if you do that job because you just take it with you. So same thing goes with people who are younger. You know, generally speaking, a lot of the advice is, well, if you're not married, you don't have kids, and you don't have debts that you would pass on to somebody else, you don't need insurance. Technically, that seems reasonable, right? But you can also be 25, really good health, and you can get a 20-year term for $200,000 for dirt cheap, like dirt cheap. And similar situation to what I was talking about before. What happens when you're 26 and something happens to make you uninsurable? And then when you're 28, you get married. And then when you're 29, you have a kid. Now you're not insurable, and you have all these things that you sure wish that you were insurable to some extent, right? So do I think that it's worth it for someone who may not have those things in their life yet to spend $12 a month, $20 a month?
Right.
Absolutely.
No,
Absolutely.
that is huge. That is huge. Because that's one thing that, again, I often never thought of is, you know, if something happened where I couldn't then be insured, right? With an individual policy. That's a really valid point.
So
no, I like that
just things to think about, right? That we naturally will not think about because we don't want to think about illness. We don't want to think about death. Right. We don't want to think about all that. Unfortunately or fortunately, it's easier to think about somebody else's health and life and death situation, and then kind of bring up to them. It's like, I know it's a sensitive topic, but have you thought about these things? So,
yeah. And again, you're talking about too, how when you're younger, and healthier, again, those insurance policies are really inexpensive, and that actually crossed my mind too as I was approaching 50, wondering about like a long-term insurance, like long-term care insurance, right? And I know that's not the topic of this discussion, but it was one of those things where, well, at 50, it's super cheap to get something that's going to care for me when I'm 80 and in a home or something, right?
Right.
I don't know.
And to that extent, and I would leave the actual answers to this to someone who is much more of a real insurance pro. But I know that there are permanent life insurance policies out there that have long-term care riders you can put onto them, which then can be a little bit more cost effective as far as how you go about doing that. Like I said, that's definitely outside of my scope of expertise. But that is a situation where if you're like dead set, it's like, nope, permanent life insurance, never going to consider it. And then you start talking about long-term care.
Sure.
If someone presents that product to you, don't necessarily write it off right away. You know, that could be a situation where, oh, okay, this does make sense.
Yep. No, that's great. I mean, I did have several conversations. Actually, it was at a Camp Fi meetup, the one prior that you and I were at. And I talked with several people there about if it's a good investment for me, long-term care, blah, blah, blah. And then we talked about, again, my assets currently and my real estate and what I had. And they're kind of, again, talking with some people that are way smarter than me. And they were like, well, you're actually at a point where you probably could self-insure, you're fine. You know?
Sure.
I mean, one of the big things is that my home would act as my care if something
Right.
catastrophic happened, right? My house is paid off. I would use the equity in my home to basically care for me if something happened in my later 80-year-old life,
Sure.
something like that. So, um, well, Dan, this was awesome. And again, we tried to make it extreme, but this was no, seriously, I think, deciding between term life insurance and whole life insurance, it is a big choice, and it really affects like your family and your family's financial future, and definitely something that we can't just cover in a 30-minute podcast episode. There's a
Right.
lot,
Yeah.
a lot to it. But I think it gives people something to ask questions, right? And
Yep.
stuff like that. So again, thank you so much for joining me today. I really do appreciate it. I want everyone to like, subscribe wherever you get your podcast. We really do appreciate it. Even on YouTube, go ahead and click the bell so you get a notification whenever we drop a new episode. We really do would love it if you would uh, leave a review. So leave a review on Apple Podcasts. Oh, Dan, I didn't talk about it. You know what we're gonna do? We're gonna do something special.
Oh, tell me.
Yeah, we're gonna do something special. Leave a review on Apple Podcasts.
Okay.
Okay. And we're gonna pick someone that leaves a review, and you're gonna get a Heavy Metal Money t-shirt.
Oh, right on.
How rad is that? You want to see what they look like? Those of you on the video podcast, check it out. I got brand new t-shirts, man. They're pretty rad. Check this out. It's got Heavy Metal Money, Extreme Personal Finance, complete with skulls, flames, guitars on a pile of cash. Anyway, we got t-shirt. By the way, Dan, I gotta know what size you are. I can send you a t-shirt. Leave a review, and we're gonna pick a review, and we're gonna send you a free Heavy Metal Money t-shirt. How rad is that? Pretty cool.
Right on. Very
All right.
cool.
So yeah, leave a review. And again, share with somebody that you think would find value, man. We really do appreciate it. And again, it's always fun jamming. We will see you next time on the Extreme Personal Finance Show. See ya.